Hi guys, welcome back to the April update of my dividend growth portfolio. In this portfolio I currently have 111,000 euros split between 19 stocks and 3 ETFs. My long-term plan is to grow it to over 1 million euros over the course of the next decade or two and to generate a nice and steady stream of passive income. And because I don't need the passive cash flow right now, I'm doing this with a focus on high-quality dividend growth stocks that are either market leaders in their field or have a form of competitive advantage and strong market position while avoiding hype stocks. Today, I'll go over the recent performance of my portfolio, show you my new buys from last month, and go over all the dividends I received in April. And that were quite a few. My name is Florian. Thank you for joining me today. I started into the month with a total portfolio value of 113,000 euros, split between 25,000 euros in ETFs and 88,000 in stocks. By the end of the month, the total portfolio had declined by almost 2%, bringing it to 111,000 euros. My ETFs declined by minus 2.6%, while my stocks had a slightly better performance with minus 1.7%. So my portfolio is down quite a bit from January this year, and this was already the third month in a row that I ended in the red. But since middle of the month, the market and also my portfolio have stabilized again after Trump sent the markets tumbling at the start of the month with his tariffs announcement and the other things he's been doing. The S&P is down by 1.1% over the month of April, but the MSCI World and the Nasdaq could close the month with around 0.5% in the green. European stocks were hit with a similar force as the S&P, but it took them a bit longer to recover. The Euro Stoxx 600 ended the month still in the red with minus 2.3%. Since the beginning of the year, it looks a bit different though. Since then, the Euro Stoxx 600 is up by almost 4%, while the S&P and the QQQ are down by minus 5.5% and minus 7%. But not all companies were affected the same last month. Many tech and big techs that have already suffered in the last month actually did not perform that bad in April. Some of this was also driven by the earnings season that is currently running. So overall, we have a very mixed picture. And as I already said, for my portfolio, this is also already the third down month in a row. When we look at the performance of the last 12 months since May last year, I was still up by 17,000 euros in January. But since then, I gave away basically all returns and am currently even 600 euros in the red on a year-over-year basis. But because I kept investing money every month, my total portfolio is still almost 30,000 euros larger than a year ago. This looks quite drastic on paper. And by the beginning of the year, I was really worrying how I would feel and react if such a crash would really happen. I mean, I was already invested during the COVID crash and also during the financial crisis in 2009, but my portfolio was much smaller back then and I was not checking it or observing it nearly as closely as I do today. And despite all preparation, it is something different to think about a crash or to experience it firsthand. But now that the crash or decline is really here, I am not even particularly worried. Instead, it feels more like a summer sale, and there are so many deals that I can barely decide on which stocks to buy. So I just stuck to my plan and bought 14 more shares of TSMC on the 14th of April with a total worth of 1,940 euros. Like most semiconductor stocks, they had a tough time in the last month and are down by almost 25% since their heights in January. But when we jump into the income sheet of my fundamental analysis dashboard in TradingView, we can see that they are fundamentally very strong and are still benefiting hugely from the very expensive and sophisticated AI chips. I also believe that they have a massive moat with their most advanced process nodes and that they will keep benefiting not only from AI chips, but from all kinds of advanced processors and the ever-increasing need for more computing power in many different areas. My total TSMC position size in my portfolio is now at 5%, roughly at the size that I am targeting with this stock. I might still buy a couple more TSMC stocks, but first I want to increase my position in Novo Nordisk and also maybe Dassault Systems a bit. Both of these stocks are fairly cheap right now, and both of these positions are also not the size I want them to be yet. When we look a bit deeper into the detailed performance of my stocks, we see that my best performer last month was my small cap Surgical Science Sweden that was in the plus with 11%. The number for TSMC is good because I almost doubled my position with new buys last month. This was followed by Microsoft with 8.4%. On the other end of the spectrum, we had my Chinese investment in JD.com that was hit harder by the tariff announcements than other stocks and lost 23.5% over the month, and Texas Instruments with minus 14%. TI was down even further by the middle of the month, but the recently reported earnings were much better than expected, which pushed the price up by almost 10% again. I actually made a more detailed video about the earnings of TSMC and ASML, and a second one where I go over the earnings of Danaher, Texas Instruments and my utility company NextEra Energy. I'll put a link to both videos in the description if you want to check out the details of each report. As a dividend growth investor, I was very happy to hear that NextEra Energy increased their dividend by 10% and Danaher by a whopping 18.5% even. That is a pretty huge increase for a stock that is basically on the same price level as in 2020. When we include the dividends and look at my total all-time performance, my worst performer of all times is my German small cap Energiekontor that I have talked about a couple of times in the last portfolio updates. And the next two stocks are already Novo Nordisk and TSMC that I just started to buy earlier this year, and in the case of Novo have not even reached my full target size yet. This is actually a behavior that I see with many of my positions when I first buy them, because I like to use weaknesses to buy. And because I don't think it is possible to find the perfect time to buy and the perfect dip, I like to start dollar cost averaging at what I find reasonable valuations, and then increase my position if and when the stock falls further. So most of my positions actually start in the red at first. In the case of Novo, that is basically good news for me, because I have just tipped my toes into this position and, as I said, plan to add more to it soon. But I don't only buy individual stocks. I also have a monthly savings plan running on the S&P 500. Here I invest 200 euros per month automatically on the first trading day of each month. I've had the savings plan since I started the portfolio. So basically, it is the perfect comparison to my stocks because it reflects the performance with new buys that I'm doing every month and not only extrapolates the pure index. In both cases, the S&P as well as my individual stocks, I use dollar cost averaging to buy more shares every month. But while I use the automatic savings plan for the S&P, in case of my individual stocks, I choose them by myself, and while I don't try to time the market per se, I still try to buy these stocks when they are close to the average valuation or below that. I can do this even though I try to keep my portfolio fairly stable because I still have a certain flexibility of which of my positions I buy every month. And so far, this strategy seems to have worked. While my S&P had a positive performance of 11.25%, my stocks are up by over 16% in their all-time performance. That's an overall outperformance of 5% since I started this detailed tracking in 2023. And because the ETF is accumulating, same as with my stocks, the dividends here are also included in the performance. So the time frame is not too long and we need to see how it looks like in 5 or so years. And an outperformance of 5% over 2.5 years is also not too much, but to be honest, I am still pretty happy that I even managed an outperformance at all. What also grew very nicely are my dividends. The second quarter usually is my best quarter for dividends, and April already started this one very strong. Overall, I received 7 dividend payments this month, and Novo Nordisk started with 31 euros and 60 cents. Then came Vici with 75.16 euros and Nvidia with a small payment of 0.73 euros. Next came TSMC with nearly 9 euros just a couple of days before I actually further increased my position in them. Towards the end of the month, I got a payment of 88.44 from the consumer staples Ahold Delhaize, followed by my biggest payment this month from JD.com with 101.22 euro. Danaher closed off the month with 8.72 euros. That brings my total dividends in this quarter to a handsome sum of almost 315 euros. This is already quite a bit more than what I had over the whole first quarter, but still behind my second quarter last year. But the quarter has just begun and I'm still missing a couple of medium-sized dividends and also my biggest payments from DHL. I am still not certain if I can beat the dividend from Q2 last year though, because I sold out of my biggest payer Rio Tinto earlier this year. So I'll be missing a decently large payment this quarter that will definitely have an effect. But remember that I'm not looking for a high dividend yield, but rather a steady dividend growth. And even though the fluctuations of my payments are still pretty high, by now we can start to see a nice upwards trend. Overall, my current portfolio allocation looks like this. The biggest change compared to last month was TSMC that is now at 5% position size. There were also some smaller changes here and there due to the different price performance, but overall, the rest of the portfolio still roughly looks the same as at the beginning of the month. For May, my plan is to increase my position in Novo Nordisk, probably sooner rather than later, because on the 7th of May they report their earnings, and I have a feeling that the stock might jump afterwards. I will also have a very close look at the earnings of Prysmian that will be reported next week on Thursday, and I might even start a position in them. This is a company that I have very high on my watch list. I actually made a video about them back in February when the stock was still very close to its all-time highs. Back then, my major complaint about them was their high valuation. But the price is down by 1/3 since then, and even though it is already up by around 25% from their lowest point in April, the valuation now still seems pretty fair. And with a 5-year dividend growth rate of 26.7% and a yield of currently 1.7%, they would fit perfectly in my dividend growth portfolio. They are also operating in a quickly growing market and have a very strong position. The business with underwater and underground cables is a very boring one, but it is also a very necessary one. And I believe that I have never shown you my watchlist before, right? I'd be happy to go over all companies that are on here in my next portfolio update if this is something that interests you. So if this is something you would like to see, please let me know down in the comments below. And guys, if you get curious about Prysmian now, I'll put a link to the video right here where I go over this unknown super compounder in detail. And this is no financial advice, so please, before investing, do your own research and only use this video as a starting point for your own analysis. That being said, thank you so much for watching guys, and see you in the next video.